I hate making videos about the price of Bitcoin because you can guarantee by the time I finished editing it, the price will have changed.
Yesterday's price is not today's price.
Between April and July, the price of the world's biggest cryptocurrency did nothing but slide. And now we're sat here in October and the price of Bitcoin has more than doubled in just a few short months. And what a couple months they've been.
You heard it here first. Bitcoin is going to zero. Zero.
Okay, Boomer.
Highest levels since May.
We're going to be speaking about El Salvador.
Okay, that's cool.
Ban or limit the use of cryptocurrencies like we're seeing in China? No.
I can't tell if that's a rhetorical question or not.
It's about more than just tipping people over Twitter, isn't it?
Bitcoin traders are taking on less risk. But it's more like tripling or quadrupling down at this point.
Everybody knows that modern day innovation is built out of a giant empty women's closet.
That's been growing north of 100% a year.
You heard it here first. Bitcoin is going to zero.
Look, I know how it feels. You log onto your crypto exchange of choice and you can see that your stack of sats can buy you an ever-increasing amount of fiat fund tokens.
There you go.
It can get real easy in situations like this to be like,
I am the greatest.
But let's not get too giddy here, folks, because if you're anything like me, you're also staring at your crypto exchange interface wondering, what next? Where is this thing going from here? And should I be selling now or holding on forever? I can already hear all those diamond handers out there screaming. The truth is, when it comes to Bitcoin, not everybody has a brave heart. So in today's video, let's explore some topics in on-chain analysis, price forecast predictions, and the trends from previous bull runs to see if we can come to some conclusions on this wild ride of an investment. And yes, I am going to call it an investment because the SEC, the American regulator, has approved a Bitcoin futures ETF. And on their website, they state that their job is to enforce securities law for 66 million Americans who invest in their future. We can't talk about what is next for Bitcoin without discussing the scarily accurate stock-to-flow model made popular by Plan B. And no, not the she said, I remember when I used to feel something Michael Caine battered in because blood that girl's 14 Plan B. This is a Dutch man in his mid-40s with a master's in law, a 25-year career in finance whose face has never been seen Plan B. Plan B has called the price multiple times, including recently, the end of August at $47,000, and in September where his prediction for the month was it closing out at $43,000. He was $200 off.
This mother don't miss.
He said that at the end of this month he expected it to be at $63,000, which many said he would be wrong on considering that Bitcoin just blew past its all-time high. But the correction that we've seen today at the time of recording this puts him
Right on track.
Nice one, Dave. So what is the stock-to-flow model and how does it work? Contrary to popular belief, Plan B didn't invent the stock-to-flow model. He borrowed it from traditional finance and applied it to Bitcoin. Stock to flow is really simple.
The stock to flow model, which only has one input, which is stock to flow ratio.
All you do is take the current supply of a commodity like gold or Bitcoin, this is the stock, and then divide it by the amount of annual production of that commodity in 1 year. This is the flow. When he first launched the model, Plan B produced this chart that showed the stock to flow of other similar assets. So you can see for gold that the stock to flow is 62. Meaning it will take 62 years for us to pull as much gold out of the ground as we have on Earth now, making it pretty scarce. Now Bitcoin is unique in the sense that we know exactly how many of them there'll ever be, 21 million, meaning the stock to flow from Plan B's perspective is easy to predict. Whereas with gold, advancements in technology mean that we could just pull more out the ground all of a sudden. So Plan B took the stock to flow of Bitcoin and modelled it against other, what he perceives as similar commodities like gold. So far, this has all been good, but even Plan B himself admits that one day
stock to flow model will break.
And in reality, the stock to flow model struggles to factor in spikes in demand or sentiment towards the asset. So I really wouldn't hang your hat on it. But Plan B has stuck his flag in the ground and said that 63k at the end of October, $98,000 at the end of November, and $133,000 by the end of December. It'll be really interesting to see if his price predictions do pan out and if he can call the price yet again. But the problem with the Plan B model, as I've said, it only really looks at one aspect of pricing Bitcoin. How much there is versus how much we can get in a year. I would argue that Bitcoin is a beautiful experiment in supply and demand, and the price is often driven by the relationship between the two. On-chain analysis looks to explore the relationship by examining the on-chain data. So what that means is because Bitcoin is a public ledger, we can see who is buying it and kind of what they're doing with their Bitcoin, where they're moving it to, etc. And on-chain analysis looks to look at those behaviors and kind of forecast prices off the back of it. A great source for this analysis is a guy called William Clement, who regularly talks on The Pomp Show.
Will, where are you, man? There he is. What's up, dude?
In their most recent conversation, which I've linked below for you, Will talks about his predictions for Bitcoin's price based on this on-chain analysis.
If you start to get that CME curve bid up, that kind of opens up the U.S. capital that was kind of locked out of this trade earlier this year, although they were participating in the grayscale arbitrage.
It can get a bit chart and stat heavy, but I'll break it down because essentially all they're doing is looking at really simple things like buying, selling and moving Bitcoin. A few interesting trends that he discusses include recent price movements seem to have been driven by whales or large wallets accumulating Bitcoin.
The entities above 1,000 BTC.
These buyers are typically long-term holders who have been in the space a long time. And when they buy Bitcoin, they take it off exchanges and store it in their own ways, such as cold storage. What this leads to is what Will calls a
supply shock.
Basically, a lack of available Bitcoin on exchanges for people to buy. So anyone who wants to buy Bitcoin has to bid the price up in order to get it. When the supply of Bitcoin on exchanges is at low levels, we normally see prices increase. It has never been lower.
We're at an all-time high in this, like by far, if you look in the top right.
One other aspect of on-chain that I find interesting is the relationship between older wallets and wallets belonging to young retail investors. When I say young, I don't mean young in terms of age. I mean, some of these crypto whales are probably in their teens. Look at Will. The guy looks about 15 and is seen as one of the go-to guys for on-chain stuff.
Feels pretty good.
So anyway, go back to 2017 when Bitcoin was at that height and it seemed like everyone in the world was buying it. Will argues that recent price action and the increase in value is a result of larger buyers and wallets, or people that have been in the space for a while. He then basically implies that retail FOMO hasn't taken over yet and uses data from Google Trends like search data for Bitcoin and things like Coinbase downloads to demonstrate this. Will and his on-chain shenanigans remain bullish around the price of crypto, and he personally feels that when retail investors really do get excited about this, the price will rocket. This is a concept I've seen being touted by loads of people in the space.
So stick around because the next few months are about to get crazy and we're about to see some fireworks.
That once we properly break the all-time highs, that FOMO will take over and you'll see explosive growth. The problem with on-chain analysis is they're proper in the weeds. They're looking at it like this close for data and trends. Rather than looking at it from 1 inch away, is there anything to be taken from zooming out a little and looking at the wider picture or trends for Bitcoin? Enter Bitcoin's 4-year cycle theory. On screen now is a chart that looks to demonstrate the previous 4-year cycles. This is described as a predictable pattern within Bitcoin's growth and is characterized by 4 key stages, which are as follows. Year 1. Exponential highs. Rapid growth in Bitcoin's price leads to massive amounts of FOMO and euphoria around the asset.
This family sold everything to buy Bitcoin 4 years ago.
Year 2, the correction. The excitement fades, people begin to sell off and we see a massive crash in Bitcoin's price. We all remember what that looks like, don't we? Year 3, accumulation. This is the phase where people who really believe in the project long-term buy in the face of basically everyone laughing at them that the price has collapsed. It's often called like a crypto winter or something like this. And really, what you have here is some serious hodlers buying it. It's this buying from these committed few that leads to the momentum for the next cycle, leading us to phase 4. This is when we see the attitude towards Bitcoin move from selling it to buying it, and we see a lot of upwards momentum and the start of the trend. This is often spurred on by an event called the halving, which is a feature of Bitcoin's code, that every roughly 4 years the reward people get for maintaining the Bitcoin network halves. After each halving, we've seen a dramatic increase in the price of Bitcoin, with the last one being May 11th, 2020, and the next one being approximately spring 2024. It makes sense that the halving results in an increase in the price, because if you're mining Bitcoin and suddenly the reward you get halves in value but your costs stay the same, you're going to want more money for that same Bitcoin. This initial momentum then leads us back into stage 1 of the 4-year cycle. This kind of cycle theory can often feel like mumbo jumbo, like we're looking for patterns where there are none. But then if you remember that we have debt cycles, property cycles and bull and bear markets. Cycles are driven by the very human emotions of fear and greed. So I don't see why Bitcoin, the most fearful and greedy asset on the planet, wouldn't have a similar kind of cycle. I guess the question is, where on the cycle are we now? I took to Google, and like anyone who has no idea on how to answer a question, I just read as many different opinions as I could, and one seemed to permeate most of the articles I read. Basically, the stage 1 jump in price is getting smaller and smaller each time, with the theory being that over time the price of Bitcoin will kind of stabilize. The common opinion also seems to be that Bitcoin is still in the phase 1 part of the growth cycle, and that the new price will top out at over 100k or more, which is in line with Plan B's stock to flow model. I'm unsure personally, and while I hope it exceeds 100k and I'm still holding on to my Bitcoin at this stage, there is a lot of ground to cover between now and then, but 135k of Bitcoin sounds nice. But there's a very large psychological barrier to the $100,000 number, isn't there? I imagine at that point, a lot of people would look to cash out, especially some of these whales who have sat on crypto for, years. I mean, I am not a whale, but I guess this because I speak whale. But this is all based on the assumption that there is another market crash and that cycles still hold up. One theory is that there's so much support and people interested in Bitcoin now that any significant drop in price would be met with resistance as people just buy in, seeing it as cheap. So we won't see a massive 80% decline like we have in the past. It might be much smaller this time, which means you could sell out and then the price just keeps rising. So what do we do? Anywhere you go online, it seems like everyone is suggesting that crypto is destined to go to $100,000 by Christmas. But let's face a home truth here. At the minute, the price of Bitcoin is very sentiment driven. What I mean by that is, its price is linked to the news and what people think it's kind of worth at the moment. Developments like El Salvador making it legal tender, Jack the Legend Mallor in his empty closet rolling out tips on Twitter.
Kelly, I'm back. Did you miss me?
And even the SEC decision to approve Bitcoin futures ETF. Are all great news for Bitcoin, but it still remains a heavily speculative and risky asset to invest in. All the on-chain stock-to-flow and cycle analysis all harks back to looking at how people are acting around Bitcoin. And I'll say this until I'm blue in the face, but I think that Bitcoin makes up an element of my portfolio and it's the very risky element. I think there's a long way to go before we can call Bitcoin a safe investment, but I think we've never been closer than we are right now. The governor of Texas held a blockchain party at his house the other day. But I do think there's an argument to say that at this point, Bitcoin could be like a self-fulfilling prophecy. Everyone's talking about prices online in unison. Everyone was saying that Q4 this year was going to be massive for crypto. Is the stock-to-flow model correct, or is it so widely publicized and well known that people kind of make it correct? The chicken or the egg? I will continue to buy crypto each month at around 5% of what I invest on a monthly basis, because that's what I do. But if the price gets anywhere near £100,000, I'm going to consider selling half of what I have in Bitcoin, because at that point, that's enough money for me to buy a buy-to-let property, which is going to have a massive impact on me and my family's life. If the price then rockets from there, I'm good, because I still have half my holdings. If it crashes after that or before, I'm still good. I'll just keep buying with a long-term view ahead of the next halving, because I'm willing to stake a portion of my asset allocation on Bitcoin and on the bet that it will continue to go up in price and gain mainstream adoption like it always has. I think if taking profit is something you want to do, you need to set a price at which that makes sense to you. Mine is between 90 and 100k, but even after that cash out, I'll just keep averaging in every month. Because let's face it, no one really knows what's going on, and our obsession over stock-to-flow models and on-chain analysis is just a reflection of the very human desire to pick things apart and kind of predict where they're going, when in reality, it could go to $1 million a coin by 2025, or it could go to
0.